Hi there, it's Gordon here again, and this time we're going to have a look at SEED Enterprise Investment Scheme. If you haven't yet done so, it's probably best if you look at the recording on the basic Enterprise Investment Scheme first, and then what you'll find is with this one there are an awful lot of similarities. In fact, much of the legislation was just copied and pasted. They wrote EIS first, and then this came several years later. So what I've done is I've basically adopted the same sort of approach as I did with EIS relief, and I've gone through the same questions. First of all, why? Well, same answer really. It's a tax break to encourage people to buy shares in a very small, new, unquoted trading company. So I said that EIS was a risky investment. This is a really risky investment. You've got to be a real gambler to put your money into one of these things, because there is a fighting chance you're going to lose it all. So, as I've said, it's when you get a very small, new, unquoted trading company issuing shares. Now, what do I mean by very small? Gross assets under £200,000, so substantially smaller than the basic EIS. Staff less than 25. Again, much smaller than ordinary EIS, and by new, it's got to have been trading for less than 2 years. Who can buy it? Same as EIS. It's got to be somebody who holds under 30% of the shares and doesn't work for the company. What's the income tax relief? Well, it's even more generous than basic EIS, reflecting the risk of the investment. Basic EIS was a tax deduction, an income tax deduction of 30% of the cost of the shares. SEED EIS, it's 50% times the cost of the shares. Lower limit, you probably wouldn't want to invest that much unless you had tons of cash to burn. Maximum investment £100,000 per annum. And again, you can have the deduction current year or prior year as a deduction against your income tax liability. And again, copied from EIS, if you sell the shares within 3 years, then the income tax relief you had is clawed back. Capital gains on sale, well, delighted to say, from the point of view of somebody trying to learn this for an exam, it is exactly the same as basic EIS. Sell the shares within 3 years and it's just a normal chargeable disposal for CGT. Hold on to the shares for more than 3 years, gains are exempt but losses are allowable. And that is identical to the EIS situation. Now, hopefully you remember that with EIS we have an EIS reinvestment relief. For SEED EIS we have something similar but different. So, it starts off looking the same. You sell any asset at all at a capital gain, and you're worried about paying capital gains tax. You then buy SEED EIS shares. My slide there horribly omitted an S. As you can see, I copied and pasted from my EIS slides, but this is supposed to say buy SEED EIS shares. This time though, you haven't got the same reinvestment window as EIS. You've got to buy them in the same tax year, for no good reason. Now, the deferral is a little bit different. To start with, it looks less generous than the EIS reinvestment relief, because you can only defer up to 50% of the lower of the gain or the cost of the shares. With EIS reinvestment relief, you could defer all of the gain. With this one, maximum deferral is 50% of the gain. However, here's where this really comes into its own. With the EIS reinvestment relief, it is only a deferral. The gain will always become chargeable when the EIS shares are sold. With this one, if you hold the SEED EIS shares more than 3 years, what was initially a deferred gain then becomes exempt. So you end up exempting half of this initially deferred gain if you defer against SEED EIS shares.